all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Every walker who joins HeartWalk means more people trained in CPR. Take the first step and register for your local HeartWalk. Find your local HeartWalk at heartwalk.org.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing, to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable and it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that, and you check a box that you intend to return home, it's non-countable.
Rest are solely those of the hosts. Do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
It's Chuck, Mike, and Ben with you here today. And as we kick things off, we got a jobs report this morning, and we saw some pretty good data come out on one side of the ledger, some pretty bad on the other side of the ledger. So the question when you get that is, well, what does it actually mean? So here's what we saw. On the good side of things, the unemployment rate dropped from 4.2% down to 4.1%. It's good. That's what you like to see. You like to see a lower unemployment rate. The confusing piece, Michael, is that the job growth was actually negative. 23,000 jobs lost for the month of July. And we had negative revisions for the previous 2 months, May being revised down from 129,000 jobs created to 63,000, and June from 57,000 down to 20,000. So 100,000 fewer jobs created in the prior 2 months than initially anticipated. What do you make of this?
So I think I contextualize it in which survey should we pay more attention to this month. The previous Fed regime was very focused on that unemployment rate, signifying tightness and what they are going to need to do with interest rate policy. I think when you get a report like this, it's not just the 23,000 job loss that you got in July, right? You can take a look at that and say, okay, 1 month's data, let's see what the next few months do. When you get those revisions, the downward revisions here is where I think you take a look at that and put a little bit more weight on the establishment survey to say, okay, this could be something to take seriously here. And so, I don't know, my overall takeaway is while this labor market is still significantly stronger than it was for most of 2025, we've got a bad month of data here, and it's something to pay attention to if it should continue.
I don't think it's a bad month. I'm going to throw it out.
Just throw it away.
I think it is worth throwing out. And the reason I think it's worth throwing out, or at least, look, you can throw it into the pile, but don't weight it too much. Let's look at the other jobs data that we've been getting. Mike, when we look at what's going on with initial claims, any signs of weakness?
No.
When we look at what's going on with continuing claims, any signs of weakness?
Nope.
When we look at job openings, any sign of weakness?
No.
It's you go through, kind of all the different pieces that are out there, and I don't think it paints any convincing picture to me that there is meaningful weakness in the labor market. In particular, I want to look at one item here in the establishment data. The establishment survey is the one where they go out and they ask companies, hey, what happened from a hiring perspective? And this is the one that showed the 23,000 jobs being lost. About halfway down the page, they break it down by sector, and halfway down the page, they have a government sector, which showed 53,000 government jobs lost in the month of July, which means that if you net that against the total, 30,000 was the private sector job growth, which, given the overall low rate of labor force growth, or actually labor force shrinking that we are seeing, to me, indicates, hey, private sector job growth was just fine. It was, in fact, the exact same as it was in June. And in May, we saw 60,000 private sector jobs created. Based on the fact that the labor force probably isn't growing, that's perfectly fine.
Mm-hmm. I think what I will land with is, again, one bad month of data, if not confirmed from other sources, is nothing to get terribly concerned about. When I do chart out the pace of job creation this year, we are now seeing a slowdown since March, right? So some really robust hiring month over month in the early stages, and it's been good but slowing since then. And so that could be a few things. One, that could just be recovering from a very fast pace after companies got used to the tariffs and hired quickly at the beginning of the year and the end of last year. It could also be signifying, like you said, there's just not a ton of employees to go around, and companies are slowing their hiring plans. Like you said, I don't see that confirmed really anywhere else, so we could see this reverse pretty quickly. But, the month-over-month job changes now for March through now were 214, 148, 63, 20, and now negative 23,000. Those were all numbers in thousands. So you can see some degree of a trend there that I think is worth looking at.
I think this is entirely a labor supply situation, and labor demand is fine. The piece of data that I find interesting for telling me this is one that I just started paying attention to like in the last couple of months, just because there's been a pronounced shift in the last couple of months. But the labor force, you can slice and dice it any way that you want in terms of, different demographics and things like that. And so when we look at some of the different slicing and dicing that you can do here, a couple that I want to point out. The first, we often talk about the age 25 to 54 labor force, the prime age labor force participation rate, right?
Yep.
In terms of what we are seeing in this demo, prime age labor force participation rate is currently at 83.4%. That's down from 83.9 earlier in the year, which, again, is like pretty much within sniffing distance of the record highs that we hit in the late 90s when we got up to like the low 84s.
Yeah.
So, okay, that wasn't sustainable. But let's look beyond the participation rate, because if it's a labor supply story, the participation rate's only telling part of it. It's not telling us the whole thing. And for this, the other piece that we get is, hey, what's the actual number of people in the civilian labor force? And remember, these are all estimates. Like, the federal government is not out there counting, like, okay, we got Jimmy, we got Susan, we got Hank. Mike, where's no, Mike's missing. Let's see where they don't do that. It's a survey and they estimate these things. But here's the point that I will make. The civilian labor force between age 25 and 54 peaked at 110.278 million in November of 25. As of right now, it's 108.076 million, meaning we've seen a 2 million person contraction in the civilian labor force since November of last year. 2 million people. Is that a small number of people, Michael?
No, that's a big chunk of the labor force that's disappeared.
That is 3 Bostons. 3 Bostons have disappeared out of the labor force. So you see that, and I say, okay, like what gives? Like what's going on here? And look, occasionally you see like little wiggles in the civilian labor force. The only time that we've seen a consistent downward pressure on the civilian labor force since we have had the data that began in like 1947 was the period from 2008 to 2014. And there you had people dropping out of the labor force because they were unemployed for so long that they weren't counted anymore. There's rules about like how they actually count these people. So this is not that, because long-term unemployment is not at those levels. We're not seeing it. So you ask yourself, okay, like what gives? Why is the civilian labor force down by 2 million people since November of 25? And to this, I take us over to another subset of that, which is, I'm sorry, that was the prime age labor force, which is, let's look at foreign-born labor. Okay? Foreign-born labor back in March of 2025 was 33.7 million people. That's what the Bureau of Labor Statistics said. Okay, like these are the number of foreign-born workers in the labor force. Today, it's 31.5 million. Michael, what is 33.7 minus 31.5?
I was told there would be no math.
2.2 million. Mike, this is entirely a labor supply story, in my opinion. You've had 2 million foreign-born workers on a net basis exit the United States in the last 16 months. That has been the corresponding drop that we have seen in the civilian labor force. Mm-hmm. That's the story, in my opinion.
So I buy it. Are we seeing what we would anticipate then on wages?
No.
Because that's the part that I am a little bit interested in.
Yes, right? I'll say yes, we are. Because the data that we are seeing indicates that by and large, remember, foreign-born workers, by and large, tend to occupy lower income jobs than many Americans.
Yep.
What we are seeing this year, and this is what Bank of America has told us, it's what PNC Bank has told us, is that lower wage jobs this year are now seeing faster wage growth than higher wage jobs.
Right, so maybe you can't detect it in the overall average hourly earnings, but if you're looking at some sort of breakdown of gains by income sector, then yeah, maybe you can detect it there.
So I think this is a labor supply issue. It does, if you're looking at this in the aggregate, it does tell you, look, there's not really any sign of inflationary pressure in the labor market. Like, if the Fed wants to use this as an excuse to not hike in September, I think they could, depending on what the August data shows in a month. But I look at this jobs report, and I think given what we're seeing in terms of labor supply, I can't believe I'm saying this because I feel like I'm just, like, off my rocker. I think it's possible in this environment to have a modestly declining number of jobs and the labor force is still okay.
I mean, if you are seeing that many people actually disappear from the labor force, then combined with retirees, that is entirely possible. I think we should take a break, but then I do want to speak a little bit more about what the market thinks this means for the Fed and what Kevin Warsh might think it means for the Fed and their policy. Quick break. We'll be right back.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed right here on the Financial Exchange.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
From breaking news to market analysis, follow the Financial Exchange Show on X and watch the show live every day. This is the Financial Exchange Radio Network.
Mike, we were talking about the jobs report that we saw this morning. What else do we want to dig into on that?
So, reaction from the markets. A week ago, after Warsh's speech, was a week ago after Warsh's speech? When was his speech?
His speech was on Wednesday.
So, yes, a week ago, this was the market action. Markets were pricing in a week ago about a 1 in 3 chance that the Fed does not move on interest rates at the next meeting. It's now moved to basically, a coin flip. 56% probability that the Fed does not move at all now at that next meeting. So how to interpret this? Markets are saying this is the jobs report that's going to justify Kevin Warsh continuing to keep interest rates where they are and let the markets do what they will with that. Given everything that we just talked about, if this is truly a labor supply issue, I'm not sure that it justifies that. And the previous Fed was much more interested in what the unemployment rate was telling us about the labor market than the pace of job creation. I'm not confident that Warsh sees things the same way, but I'm guessing that his voting members do. And so I have no idea how the Fed is going to respond to this jobs report, given everything we just laid out about, yes, weak job creation, but it's weak job creation in the context of a shrinking labor force that is able to actually supply the market right now.
Yeah, and I think, look, we can look at, the September projections. I think that the 10-year Treasury is telling a more consistent story, in my opinion.
Mm-hmm.
The day after, or the day of Warsh's press conference, it closed at 4.622%.
Yep.
Right now, it's at 4.635%.
Yep.
Basically hasn't moved. It's moved 1 basis point in the last week. This despite going up to 4.75 and then back down to 4.6, but it's basically where it was when his press conference ended. And I think it gets to where I stand on the Fed, which is, Mike, is there any sense from the Fed that, even from the people that are talking more hawkishly, the people that probably were in favor of hiking rates, like some of those 3 dissents at the last meeting.
Yep.
Do you get any sense that any of them are like, hey, Fed funds is at 3.5 now. We need to take it up to 6.
No. All of them are of the opinion that all of those who are in favor of hiking seem to be the opinion that we need to get started on maybe raising rates a little bit at the moment. But yeah, none of them are at least voicing concerns that the Fed is way behind the 8 ball on interest rates right now.
If the Fed hikes twice this year or 3 times by Q1 of next year, does that have any material impact on asset prices?
Probably not. It's going to be
not.
Far more guided by what they have to say or don't say.
So, even what they say, ultimately, we trust what they say because, okay, if they say they're still concerned about this, then they're going to keep hiking. If Fed funds goes back up to 4.25, it doesn't make a material difference to this economy. Remember, we saw the Fed hike 5% over the course of 2022 into 23, and you still didn't get a recession there.
Mm-hmm.
Now, granted, you were coming off a hotter economy, but I the way that everyone fixates on if the Fed hikes, it's going to be a huge mistake. Like if they hike 0.25% or 0.5% or 3/4,
nobody cares.
It's not going to move the market in a meaningful way because remember, Fed hikes affect the economy by no one borrows overnight. Like when you go buy a house, Mike, does the bank lend you money for 30 days?
No.
No, they do it for 30 years. What the Fed does to interest rates doesn't affect the borrowing on your mortgage. We know this, by the way, because the last 2 times the Fed has cut interest rates, mortgage rates have moved up while they've been cutting. So I'm of the opinion here that if you want to pay attention to what the Fed's doing, everyone just hyper focuses on the Fed. It doesn't matter what they do at any one meeting. Pay attention to what they're going to do over a 12 to 18 month period, and if it's not more than 1% in either direction, it probably doesn't matter.
Yeah.
It's just not enough to move. Again, we've talked at length how the last 3 to 4 years what the Fed has done. We're not sure that the transmission into the real economy is as effective as it used to be. So I kind of look at it and, all of the, are they going to hike this meeting or is it going to be next? Forget about it. What I'm concerned about is, hey, is there something out there that is going to force the Fed to hike from 3.5% to 5.5%? And if there is, then that has my attention. If it's, we're going to fine-tune things by going from 3.5 to 4, wake me up a couple months from then.
Yeah, because to your point, Chuck, those bigger magnitude hikes back in 2022, while they didn't sink us into recession, did contribute to one of the worst markets that we've seen in quite some time.
Yes.
So that's relevant.
But that's the magnitude that you had. Remember, a 5% hike in interest rates got us a 25% drop in markets.
Yeah.
Let's take a quick break. When we return, we've got Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, Your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Navigating Retirement Housing Choices. Mike, as you get towards retirement, what are some of the considerations for whether you should stay in the property that you've been in for a while or consider moving to a new one?
To me, for most people, they come down to 2 factors. One would be financial, and 2 would be quality of life. And so, first things first, right? I mean, you're heading to retirement. Did you do enough saving to be able to afford to live in the same place you did, with or without that mortgage, with where property taxes and insurance costs have been going? So that's probably number one. But the one that people kind of start to forget about is the quality of life. And so how close am I to family? How close am I to health care? And am I going to be safe in this house 20 years from now from a healthcare perspective?
It seems like for most people, they're going to have different priorities as far as which of those come first. So it very much is not, here's what you do, but more, here are the things you need to consider and then get to your own conclusion.
Yeah, but I think it's important that people think long-term on this, right? You do not want to make this decision twice. And so very often we do see that happen. Hey, I'm moving here because of taxes, and I didn't think about the other qualitative lifestyle pieces about that move.
Folks, our guide is titled Navigating Retirement Housing Choices. There are 2 ways to request it. First, you can call 800-393-4001. Second, you can go to armstrongadvisory.com. That phone number again is 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are reacting to the jobs data that came out this morning that showed an unexpected loss of 23,000 jobs. Meanwhile, the Dow Jones is up over 150 points, or 0.3%. S&P 500's up 0.5%, while the NASDAQ is up over 1%. Oil is up 34 points, 0.4%. Brent crude is up 0.2%. Gold surging again today, up $110 or 2.5%. Silver up 3.86%. Wendy's shares popped 2% this morning after it reported global sales decreased by more than 6%, which was driven by an 8.2% decline in the U.S. The company also withdrew its 2026 financial outlook, but did beat FactSet consensus on earnings, revenue, and adjusted EBITDA. Shares for solar stocks increased after President Donald Trump imposed tariffs on products that are imported to make solar panels. First Solar jumped more than 3%, Invesco Solar rose 2%, and Solar Edge Technologies gained 1%. Airbnb shares surged over 15% after Airbnb posted second quarter earnings of $1.37 per share on revenue of $3.61 billion. That outpaced the earnings of $1.25 on revenues and $3.58 billion forecast by analysts. And finally, Cloudflare jumped more than 10% after issuing solid guidance for the full year and current quarter. Cloudflare expects adjusted earnings of 34 cents per share on revenue of $736 million to $737 million in the third quarter. Second quarter results also surpassed estimates on the top and bottom lines. I am Ben Kitchen, and that was Wall Street Watch.
Chuck,
go ahead. Nope, all you.
Before we move on, can we just talk about fast food for a moment here?
I love talking about fast food.
Me too. I think this might be mainly because my stomach
Ben
just
convinced me to
grumbled
get a
and I'm
burrito
hungry.
yesterday for
Oh,
lunch.
yeah, I remember.
Not fast food, but fast casual.
So,
but not Chipotle.
We've got earnings now from McDonald's, Burger King, and Wendy's, and I just want to draw out the wild divergence in sales. So, all of these retail companies break out their sales with a metric that we refer to as same-store sales. It's looking at how did your sales do specifically at locations that were open the same time last year. So it washes out, hey, we opened 15 new stores and they performed really well or poorly. McDonald's was basically flat. They saw same-store sales increase in the U.S. less than 1%. Wendy's, as Ben just mentioned, same-store sales down 7%. Burger King up 8.5%. The divergence there, the swing is kind of wild in a single quarter to see these three companies who effectively, I'm sorry to all the passionate fast food fans out there, they do the same thing. And one saw same-store sales down 7%, another saw them up 8.5%. That is a massive swing in execution.
It is. It's an execution story, not a low-income consumer story.
Right. So, I mean, anybody looking for a trend here in how the U.S. consumer is doing from looking at fast food sales, you're not going to get it, but just pretty wild and commendable to restaurant brands folks who own Burger King. Yeah, quite a turnaround.
I want to continue talking Fed just because we kind of segued into that. We got a couple pieces here. One from Bloomberg. Trump says rates should drop, but it's not entirely up to Warsh. And then another piece from Mohamed El-Arian, former PIMCO, what was he, the president of PIMCO?
Yeah, and one of the most famous bond traders in history.
Yeah, Mohamed El-Arian's got a piece in the Financial Times titled Warsh is being misread. So a couple things. And then there was another piece, by the way, in the Financial Times from Claire Jones saying yesterday that Warsh is actually open to a September rate hike. So I have a few takeaways here.
Okay.
From the Bloomberg piece. I think that this is, by and large, President Trump saying, hey, I'm giving you a mulligan because the committee might do what the committee does, but I still want you to lower rates.
Sure. So same message that he's sent for the last several years, but a little bit nicer because he has Warsh in place.
Simple message. From Mohamed El-Arian. Mohamed El-Arian has been really critical of the Fed for the last couple of years and has been very pro-Warsh, basically since Warsh, I mean, you don't announce your candidacy for the Fed chair. It's not like, you don't have to file, you're not running in an election, but basically since Warsh, made it clear that he wanted to be Fed chair, El-Arian has very much been supporting him. So it's not surprising to me that he's kind of doubling down on that here.
Sure.
Again, totally fine. The piece that's interesting to me is what we are getting from Claire Jones in the Financial Times, because forward guidance is a very specific thing. It's not telling people, hey, if X happens, here's how we'll react. It's saying, here is what our policy is going to be. When you simultaneously, or when someone close to you says, hey, Nick Timiraos is just, a glorified stenographer, but then you get Claire Jones saying, well, Warsh might be open to, a Fed rate hike in September, it becomes apparent that it's not necessarily forward guidance that you are opposed to because you are engaging in the same forward guidance that Nick Timiraos used to do for Jerome Powell, but it's just you want it to be in a different venue.
That is an interpretation.
That's what it is.
That's very
Claire
possibly
Jones isn't publishing that without Kevin Warsh wanting her to.
I take your point, but for that to be the case, we'd need to see it repeated a few times.
Not really.
Yeah.
It just happened.
Yeah.
Do you think it's an accident?
Yeah. I think there's a small possibility that it wasn't directed by Warsh, and you would see that proven out if it never happened again from Claire Jones.
Answer me a question then.
Okay.
How does Claire Jones get information saying, hey, Kevin Warsh might be open to a rate hike in September if it's not coming from Warsh?
I
if
think
it's
it's
from someone close
very
to Warsh,
unlikely,
then
but somebody close to Warsh instead of him.
and that person's just authorized to speak on his behalf without him saying anything?
There's been a few people that have been speaking to the press that clearly weren't authorized by Warsh to speak to the press, so possibly, but unlikely. I'm with you. I'm just trying to play devil's advocate for a moment. It's a very new Fed chair that's trying to do things very differently, and so I'm just not.
My
ready
point
to
is that I don't
interpret
know
that.
if he's actually doing them that differently.
Yeah.
Maybe he is, maybe he isn't.
Yeah.
Again, but this is the thing. When you don't tell people anything, they're going to speculate.
Mm-hmm.
Like it's just, if you want to tamp down on speculation, you give more access. And if you don't, then people are going to speculate about, well, where's this coming from? Is this actually like how forward guidance is going to be disseminated going forward? These are the things that people wonder about. And it's going to be you're not going to get rid of that by saying, okay, we're going to talk about it less.
Yeah.
It's the same reason why. And a bad segue. I'm not going to get into that. But sometimes I see a landmine coming, and I'm like, no, we're going to avoid that one before we get there.
Not often, but sometimes.
No, usually I'm like, ooh, let's touch this and see what happens, and it usually blows up. That's how it goes. This time it's like, no, stay away. Don't touch that one. So let's talk about what we saw yesterday on the bond side of things. 10-year yields moved up for U.S. Treasuries, and a couple different things were going on yesterday that could have caused it. On one hand, we got very, very good jobless claims, 199,000 on the initial side, and continuing claims that are now the same level they were at in 2023. So you look at that, and it makes sense. Okay, if the economic data continues to be good, then maybe it puts more pressure on the Fed to, engage in a series of hikes, and so rates rise. The other piece that you got was we're continuing just to see more and more underwriting of more and more offerings of debt from these big AI hyperscalers. There's a piece here in Bloomberg about some of the ones that have happened over the course of the year. But yesterday was it Google that was putting out a big one?
I think it was Google. I'm having a tough time keeping them all straight at this point, given how much they're all quickly
Yes, here we
raising.
go. Alphabet returns to bond market with new debt offering. So it's $25 billion in debt that they offered yesterday.
Amazon did $25 billion in early July.
It's like table stakes now. It's $25 billion a quarter.
Yeah, SpaceX was doing it. Yeah, I mean, all of these giant. Here's what you have to kind of contextualize. I know a lot of people think about the stock market and can pretty quickly and easily understand it. The bond market is massive, but you have these giants now issuing record amounts of debt at the same time that the U.S. government needs to do the same thing, right? So you have all of these different entities competing for dollars, and the trend has been that it's raising interest rates for everybody, because when you have more debt issuance by giant, generally pretty credit-worthy institutions.
Sure.
They're not treated the same, right? The U.S. government is not treated the same as Amazon, but they're treated pretty similarly when looking at their debt.
Let's take a quick break here. When we return, I guess we're talking about AI next.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699, or you can request it online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
From market moves to retirement planning strategy, follow the Financial Exchange on Instagram and stay up to date on the business news of the day. This is the Financial Exchange Radio Network.
The 2026 DAV 5K Boston is set for Saturday, November 7th at Fort Independence at Castle Island. If you want to participate, now's the time to register. More than 800 runners have already signed up, making this the fastest registration pace in history. The event will be a sellout soon, so head to dav5k.boston for all the information on how you can take part. And if you can't, please consider making a donation. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
Mike, I want to talk about this piece in the Wall Street Journal. It's titled, Facing AI Apocalypse, Once Hot Software Companies Race to Reinvent Themselves. So the software space has been kind of wild this year. From like end of November last year, early November last year, through late February, software got bludgeoned.
Go ahead.
Software as a whole was down like 40 to 50% amongst big names.
And we talked a lot about it on the program as to the reasons why we thought that might be happening. The going consensus was AI makes writing software a heck of a lot easier, and so increased competition, tougher time differentiating yourselves as a software as a service company. Okay, logical.
So software falls like 40, 50%, kind of chops around there in February and March. And then in early April, wakes up and is like, hey, I'll get up off the mat. Software as a category then rallies like 40% from the bottom. Remember, if you lose 50 and then make 40 back, you're not down 10. You're still down, 15, 20 from there. So like rallies back strongly, pukes most of that back then over the course of June, and then rallies again like 25% in the last, couple of weeks. So it's just been an insane ride for the category as a whole, and the individual names in the sector are just seeing like, it's not uncommon to be seeing like 25 to 30% moves on earnings, depending on whether or not the market likes them right now.
Yeah.
So you get this piece here. Again, it's talking about these software companies and, hey, the ones that have been built conventionally using, employees and everything that we know to be, historically true about building software are trying to deal with this influx of upstarts that are, hey, we've got 2 employees and here's our product at a fraction of the cost of what yours does. Who wants to, use our software?
Right. The going theme that I'm hearing from executives at software companies is, regardless of whether or not it's true, I'm going to try and convince the public that AI is going to be a huge benefit to my company. I bring you to a quote from Brian Chesky, the CEO of Airbnb, during his earnings call yesterday.
Yeah.
Quote, AI is the best thing to ever happen to Airbnb. I doubt it. I very much doubt that AI is the best thing to ever happen
people wanting
to
to travel
Airbnb.
is probably the best thing that's ever happened to Airbnb.
Yeah, like the development of the middle class globally, becoming wealthier is probably the best thing to ever happen to Airbnb. AI is not. AI is going to potentially breed new challengers to your company, but every CEO's job in the space right now is to convince us that they are so good at AI that it's going to dramatically increase sales. And he cites a few things, making it easier for property owners to redesign their landing page to make it look more attractive and target customers better, which all could be true on the margins, but doesn't negate the fact that Airbnb is likely to face more competition because of artificial intelligence.
Yeah, I think it's going to be. Look, we've talked about this a couple times on the show. The risk to software companies is not that, a random law firm says, hey, like, we're going to use artificial intelligence to develop, like, our own, systems for, like, running ourselves internally. The reason that you hire software companies, there's 2 of them. They provide you a service, and they take a bunch of like thinking and liability off your plate. Like you don't have to deal with it. So like a car wash is not going to be like, hey, let's develop our own AI because they're not good at it. Same with a law firm, same with a construction company, same with a wiffle ball tournament. Like, no, you're not going to do that. The risk is that someone else, probably from a software company, says, hey, I can build something better and cheaper using AI, and then cheaper software with lower margins or with the same margins but just a cheaper price comes in and eats lunch. But remember, margins are always an opportunity for someone to come in. These software as a service companies, the reason why they've had fat margins is because there are big moats to changing them. Like if you run a database and you're using Oracle or you're using Salesforce or you're using whoever might be out there, even if someone offers you something marginally cheaper, like if someone comes in and is like, hey, I can save you 10%, you're like, no, did a database move 10 years ago, never doing it again. But if someone comes in and is like, I can save you 70%, you're like, okay, now we'll talk.
Yeah.
And that's the risk.
Or if you're a new business,
right,
and you haven't selected a software lineup yet,
yes,
then that's the other risk. By the way, I mentioned Airbnb. I'd be remiss to not mention what's happening today. In spite of my criticism of his commentary around AI,
they're cooking.
Stock's up 16% on a killer earnings quarter. So not to poo-poo any of their execution, I just have some doubts that AI is the best thing to ever happen to your company.
Yeah, that's fair.
Yeah,
that's fair. Let's see. Piece in the Financial Times. To fix education, fix the economy first. What does that mean, Michael?
So first things first, it's not about the United States. They're talking about the UK economy, which has been a dumpster fire for the better part of the last decade. So I might agree in the context of the UK that instead of an education problem, they have an economy problem. I don't know that the same thing applies here. We seem to have some problems with education here in the United States, and the economy is doing just fine.
Let's take a quick break. We still have a whole nother hour to go, though, so yeah, it'll be pretty great, and you should listen to what we have going on then.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing, to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable. And it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that, and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699. Or you can simply request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
It's Chuck, Mike, and Ben with you here on a Jobs Friday at 8:30 a.m. Eastern Time. The Bureau of Labor Statistics, or the BLS as we refer to them, they're part of the Department of Labor. So, you know how some sports stadiums, it's like so-and-so field at something park?
Yeah. So this is the Bureau of Labor Statistics at the Department of Labor?
Yes.
Okay.
Do they have an acronym that sits under them, do we know?
Ooh. BLS, DOL. We've got to find out.
We'll see. We'll do a little bit of research.
Yeah.
But they came out with the jobs report, 23,000 jobs lost for the month. So not great in terms of the headline number. But the unemployment rate dropped to 4.1% because the labor force shrunk. 381,000 people dropping out of the labor force. Some of them may have retired. Some of them may no longer be in the country. Some of them may be looking at, going back to college or something like that. So, again, the story here is one that's been consistent this year in that the unemployment rate has been stable or declining over the course of 2026, despite relatively muted job growth, aside from a couple months in the spring that made it look like maybe we had some green shoots and we're turning the corner. So I continue to grade the U.S. labor market as slow but stable, and I think that's how I would characterize it. Overall, I probably give this report, and again, I know that with a headline number that has job loss, it's weird to say this, I still probably give it, given the context of labor supply, which is shrinking, you probably give this report a B-. It's tough to be like, this is a problem, because here's the example that I'll give to people. If you had 100 people in your country and 4 of them were unemployed, you'd say, okay, great, we got 4% unemployment, that's good. If one of those people left who had a job, and now you've got 95 people employed and 99 out of 99 total, you still have basically 4% unemployment. Did your economy worsen? Did the labor market worsen because that person left the country?
Right.
Not really. The problem that you do have is, and this is an interesting question that matters for the future, does it affect demand in such a way that then reduces labor demand in the future? And that, hey, let's say that person who left, let's say they spent $100 a year in the economy. Okay, that's not a huge, impact. Them leaving doesn't really change things. But what if that person who left, who's no longer in the labor force, no longer, in your population, what if they spent $1 million a year? Oh, okay, maybe then a company doesn't have the same demand for its products, and so they have to lay someone off in the future. So this is the question that we haven't had to deal with in the U.S. because outside of the great financial crisis, the labor force has been growing consistently since World War II. We don't really know what it looks like if the labor force stops growing for any extended period of time. So we'll see.
Yep.
But I can't look at this report and be like, well, it's bad, because it's just reflecting labor supply that is reduced now. How are markets responding to this? Stocks, like it modestly. Dow's up about 130 points. S&P's up about 40. NASDAQ Composite up 288. So kind of what we've been seeing the last couple weeks. 10-year Treasury, initially you saw a big move into Treasuries, probably because of that job loss on the headline number. At one point this morning, the 10-year Treasury was back down around 4.6%. It subsequently has rallied back to be at 4.65, so still down about 2 basis points, but not as big of a move as when we saw markets open. Dollar index down 0.28% to 99.51. The movement in gold, very much reflective of rates coming down and dollar down. Gold up another $100, now it's back to $4,400. So gold catching a bid this week after comping around $4,000 for a couple months. And we've got crude oil back up another 69 cents a barrel to $77.98. AAA national average for gas prices catching up to the decline earlier in the week in crude, down another 2.1 cents overnight to 4.04. Probably have a little room to move down into like that 3.90 range if we hold in this range for pricing. But the same caveat's been in place for the last 6 months, which is, hey, we'll see what happens in Hormuz next week, because if it's good news, that can move down meaningfully. If it's bad news, it can move up meaningfully. And none of us have any idea what next week is going to bring in terms of Hormuz news.
Hormuz news, like it.
I'm going to start using that a little bit more.
Mm-hmm.
Bank of America is a bank in America. They have a gauge that measures sentiment. They call it a sentiment gauge. And it has hit the most extreme bullish level since 2021, Michael. Does that mean that everyone should just sell their stocks and cross their fingers and I don't know what you do after that?
Well, some context here. We're saying that the B of A survey is telling us that it's extraordinarily bullish. Why should people sell their stocks? Well, it's actually a contrarian indicator. This survey has, I don't know how long it's been out there. I see data going back at least to the early 2000s.
It's at least 25 years.
Yeah, it could have been longer. But generally speaking, Bank of America categorizes a reading of 8 or above as, while that it signifies that fund managers and hedge funds and investors are positioned for stocks to go up extremely bullishly, it's actually historically been a contrarian indicator. When everybody thinks things are positive, it has been an indication that things are about to fall apart. And we've seen this, in a few specific cases that I can get a reading on, right? In February of 2020, right before the COVID pandemic hit, extreme bullishness in markets. December of 2020, and then we went on a slide right through 2022 when inflation ticked up. So it's not a great timing indicator in all cases, but what I do like about it is not purely one of those surveys where a researcher is going out and asking people how they feel. They're actually measuring flows into funds, fund manager cash allocations, what portion of the market is participating in a rally. And so I like it from that perspective. And I think it is of note that it is hitting a very, very high level right now, and partly explains why we've seen, the S&P up like 3% in 5 days now.
Yeah, and look, you mentioned the S&P up 3% in 5 days. Well, let's talk just about where indices are this year. Just again, sometimes we miss the big picture and getting bogged down a little bit. S&P's up about 13% this year. Dow's up 12.5%. NASDAQ up 14.5%. Pretty close concentration there between the major U.S. indices. A little different from what we've seen in prior years, in that, things are pretty close between them. It's not like one is just driving the ship here. The Russell 2000 is actually up 21% year to date. So small caps finally having their moment in the sun after getting kind of beaten up for a little while. And so that's kind of fun to see as well. On the international side of things, remember, last year was characterized by strong international outperformance. This year, a little bit more mixed. EM still outperforming the U.S., which is, again, just not what you would expect given what's happened with the dollar and in the Middle East. But there's a caveat here. If you look at the MSCI Emerging Markets Index and what it actually represents, here's the thing. 80% of it is in Asia. Okay, fine. I understand that. That's where, you've got a lot of, developing markets. I understand. I get that. Tell me more, Chuck. Well, here's the deal. 45% of the MSCI Emerging Markets Index is South Korea and Taiwan. Have chip stocks been doing okay this year, Michael?
They certainly were at the beginning of this year, yeah.
They certainly have. And even now, they're still up massively, even with the pullbacks that they've seen. So this is one where you could look at that emerging markets performance this year and be like, wow, emerging market economies must be doing great. No, they're actually kind of doing terribly. It's just that two of them have this huge weighting in the MSCI EM index. And so because the chip companies inside of those two are going gangbusters, they make the index look better than I think the economies in a lot of those countries actually are. So, Europe is up 9.25% this year for the MSCI Europe Index. So international, more of kind of a mixed bag, but just interesting, what you're seeing given all of the global stories that we've been talking about.
One other market construction item to note there, Chuck, you talked about how the NASDAQ and S&P are actually similarly performing this year. Important to point out that NASDAQ, typically that tech-heavy sector, the overlap between the S&P 500 and the NASDAQ is quite a bit, what's the right way to put it, heavier. There's more overlap today than there was 3 years ago.
Right, Walmart's on the NASDAQ.
And there's a heck of a lot more overlap than there was 10 years ago. Part of that is inclusion in the NASDAQ. Another big part is just the thing that's driven the entire market higher has been those tech-heavy stocks. And so naturally, those indices today are much more correlated than they were a decade ago when tech was a smaller portion of the market.
Let's take a quick break here. When we return, we're talking China and AI.
Market insight, retirement strategies, real talk about Wall Street and economic trends. All live every day on our YouTube channel. Go to youtube.com/The Financial Exchange Show. This is The Financial Exchange. A nursing home stay can cost more than $14,000 a month. Before you assume you have to spend everything to qualify for Medicaid, get the facts. Call 866-848-5699 for your free copy of Cushing & Dolan's new guide, Last Minute Medicaid Eligibility. That's 866-848-5699, or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing, to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins Heart Walk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Join Heart Walk today. Find your local Heart Walk at heartwalk.org.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
All right, time now for trivia here on the Financial Exchange. And on this date in 2000, Al Gore named his running mate for the presidential election, and Gore made somewhat of a stunning selection for his running mate. So the question today is, who was Al Gore's running mate for the 2000 election? Who was Al Gore's running mate for the 2000 election? Be the third person to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you will win a Financial Exchange Show t-shirt. The third correct response will be our winner. See the complete contest rules at financialexchangeshow.com.
Mike, we got a piece here from CNBC. It's titled, China is gaining ground in AI, but the U.S. still has a major advantage. What is the advantage?
The latest and greatest semiconductors.
Ooh.
So I like to believe that this is the case, and it is the case that Chinese chips are not as cutting edge as the U.S., and we have somewhat successfully prevented them from getting at least large supplies of, for instance, the latest and greatest NVIDIA semiconductors. Are facts and evidence that AI models developed here in the United States are that much better than Chinese ones? Because I'm not sure that I can come to that conclusion right now.
No, but it's also what I'm also unclear about, given just how the and again, I am very much, in terms of like my AI knowledge, it probably ranks like as a 3 out of 10 in terms of like how much like you really need to know. When you look at a lot of the benchmark scores, a lot of them are just kind of clustering and coalescing, kind of in pretty similar areas.
Including Chinese-made models.
Correct.
Yeah.
And look, there's been a lot of chatter in the last couple of weeks about like, hey, are Chinese models using what's called distillation, where basically what you do is you take a U.S. model, you ask it millions of different questions to get the outputs, and then from there you can say, okay, based on these outputs, here are the weights for the model as inputs, and you basically back into trying to replicate the model.
I.e., you rip it off, which is kind of the Chinese way of doing things.
Which is, again, very possible the Chinese firms are doing that. And, again, I think the expectation should be that they're probably going to, because we've seen Chinese abuses of U.S. intellectual property in many industries that they've entered into.
And in this case, I'm not even sure you can claim that that's illegal in any way.
But the other place that I get to is, aside from like very specific niche roles, does the average person need the best AI model?
No.
Doesn't need anything close. Like if you're like asking your AI, hey, like, what's the difference between like a Big Mac and a Whopper? You probably don't need to be running Fable 5 in order to do that.
If you're using it to pretty up a presentation to senior management in PowerPoint, you still probably don't need the latest Fable 5 model.
You don't.
Yeah.
If you are trying to solve math problems that no one's ever solved, you probably do.
If you need
most of us, the most math we do in a given day is, hey, you got the change wrong. Right? Like that's about as far as we typically go in a normal day for math. So I look at this and I continue. I know why the AI labs want to do this, because they're trying to get to the point where the models are self-evolving, and that potentially speeds things up and cuts costs dramatically. But I I don't know that it's something where it's like what if you get there first and someone else gets there like 3 months later? Is that a huge difference? I don't know, and I'm okay acknowledging that.
Yeah. Again, I really want to believe that the United States is going to keep its ground that it has gotten by developing these latest and greatest semiconductors and attracting the world's best talent in these spaces. But I'll be honest that China has a lot of advantages that we just don't in this space. One, their means of developing, while it wouldn't work for the U.S. system of raising capital, seem to benefit those AI labs, right? It's basically a communist method of, we're going to require all these labs to share all of their information with the other labs so that they can all build upon themselves. And the other big advantage they have in this case is power. Plain old electricity is needed for all this stuff. And while I wouldn't want to live there, there's no fights going on about building power plants in the local municipality there are here in the United States.
No. If
you don't hear those stories of, Methuen voters lining up to block the next AI data centers. There's not one in Methuen that I'm aware of. Lowell, there is, though. That doesn't happen in China because you don't hear from those people.
Correct. It's okay. The Chinese government says we're going to build 5 power plants here. And the Chinese people say, where would you like us to move?
Right.
It's like, again, not great for the people, but you understand why this can, make it so that you can develop the infrastructure for data centers more rapidly. So I think, look, everyone wants to phrase this as, put this as hey, it's this big race to see who gets to AGI first, artificial general intelligence. First of all, we don't even know if this technology, with the way it's currently structured, can get you there. Mm. And second, I don't know if just by virtue of being first, what do you win then? The AGI kills you first?
Yeah, look, first has mattered in some industries and not at all in others. So, yeah, I don't have a firm answer there. Google wasn't first.
No, people
iPhone wasn't
Google
first.
was 6 years behind. It was just better than everyone else.
Facebook wasn't first.
No, that was MySpace.
Yeah. So
whatever happened to that? That was sold 5 or 6 times, right?
Yeah, probably owned by Verizon or
Justin
AOL.
Timberlake owned it at one point. Let's take a quick break. I think he did. Let's take a quick break, and when we come back, we've got the trivia answer, and we'll find out who owns MySpace.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
The biggest retirement decision you make may have nothing to do with your investments. This is Mike Armstrong from the Armstrong Advisory Group. You've worked hard preparing your finances for retirement, so take the time to think about whether your home will still fit the life you want to live. The house that's perfect today could become more work than it's worth a few years from now. Stairs, maintenance, a big yard, or even being too far from the people and places that matter. Our new guide, Navigating Retirement Housing Choices, walks through the different stages of retirement, the housing options available, and the questions you should be asking now before a decision becomes urgent. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. One day, you're living in your own home. The next, you can't return home after rehab. Now, you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now, 866-848-5699, and get your free copy of Last Minute Medicaid Eligibility. That's 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide available this month titled Navigating Retirement Housing Choices. Mike, when we look at the considerations for people in their housing and retirement, one that comes up are these continuing care retirement communities, CCRCs, or age-in-place communities as they're known. How does someone make a decision about looking at one of those?
Well, I think obviously you have to sort out your priorities, but the first thing is to think long-term about this. And what people sometimes overlook with these places is that term continuing care means that they adapt to your needs over time, but they do not just allow anyone in. In a lot of cases, they will have cognitive and physical tests that you need to pass in order to be accepted into these communities that then will provide all sorts of care later in life. And so I think early on is always better if you're considering that sort of thing.
The financial aspect of these also has a number of considerations as well in terms of what's actually affordable given your particular budget and liquidity.
Do I need a buy-in? Am I going to rent a place? What are my options for later in life? And then all sorts of tax considerations. Hey, I really want an income tax-free state. Well, is that worth it if I'm going to be paying more in property taxes given the composition of my assets and income? All of these really important considerations.
The guide this month is titled Navigating Retirement Housing Choices, and you've got a couple different ways to request it. First, you can call 800-393-4001. The second choice, you can go to armstrongadvisory.com and request it there. Again, that website is armstrongadvisory.com, or you can get it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are still reacting to this morning's jobs data that saw an unexpected drop of 23,000 jobs. Right now, the Dow Jones is up 74 points, or just a little over 0.1%. The S&P 500's up just about 50 points, or a little over 0.6%. The NASDAQ is soaring up 1.35%. Oil is up over 1%. Brent crude is up about 1%. Gold is up 2.73%, while silver is up 3.76%. Wendy's shares are up just about 0.2% after it reported global sales decreased by more than 6%, which was driven by an 8.2% decline in the U.S. The company also withdrew its 2026 financial outlook, but beat FactSet consensus on earnings, revenue, and adjusted EBITDA. Shares for solar stocks increased after President Donald Trump imposed tariffs on products that are imported to make solar panels. First Solar jumped more than 3%, Invesco Solar rose 2%, and Solar Edge Technologies gained 1%. Airbnb surged over 15% after Airbnb posted second quarter earnings of $1.37 per share on revenue of $3.61 billion. That outpaced the earnings of $1.25 on revenues of $3.58 billion forecasted by analysts. And finally, Cloudflare jumped more than 10% after issuing solid guidance for the full year and current quarter. Cloudflare expects adjusted earnings of 34 cents per share on revenue of $736 to $737 million in the third quarter. Second quarter results also surpassed estimates on the top and bottom lines. I am Ben Kitchen, and that is Wall Street Watch. We have our trivia question we've got to get to. The question today was, who was Al Gore's running mate in the 2000 election? Your answer was Joe Lieberman. Joe in South Yarmouth is our winner. He will be taking home a Financial Exchange Show t-shirt. See complete contest rules at financialexchangeshow.com.
Who owned MySpace, Chuck?
Mike, I did a bit of research on this. So first, do you know when MySpace was founded?
Soon after the internet was created?
No. This is what's so interesting. MySpace was only founded in August of 2003. I had thought it was like a 99, 2000, type of deal. It was 2003, which was only like a year and a half before Facebook, which is kind of interesting. So it was founded in 2003. Its first sale took place in 2005. Do you know who bought it?
I do, but only because I looked it up.
Oh. News Corporation bought it back in 2005 for about $580 million.
Good old Rupert.
6 years later, they sold it to Justin Timberlake for $35 million.
Oh, that's not the direction you want to go with that.
No.
Yeah, that's usually the opposite of what you try and do when you invest in a company.
They then, 4 years later, they rebranded the company that had bought them, the parent company, to be called Viant Technology. And then they sold off MySpace to Time in 2016, which apparently Time Incorporated still existed then. Who knew? And then in 2018, Meredith Corporation bought Time, including the stake in Viant and MySpace. And then they spun it off a year later into a company called Viant Technology, LLC, which then went public in 2021, because you could send anything public in 2021, including the parent of MySpace. And it's actually still a publicly traded company now. You can Viant Technology exists on public markets. MySpace is not like the big thing for them, obviously, but it's kind of wild that I had no idea it was actually part of a publicly traded company now.
This thing's so unimportant that according to Wikipedia, in March of 2019, MySpace lost all of their content before 2016 after a faulty server migration, which, again, thinking about MySpace, that means you lost all of your content because nobody was posting post 2016. Nobody was posting on MySpace post like 2011. So, yeah, I'm not sure that there's much value left there.
Doesn't seem like it.
In my view, Chuck, it seems rather unlikely.
One day you're living in your own home. The next, you can't return home after rehab. Now you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major financial decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now, 866-848-5699, and get your free copy of Last Minute Medicaid Eligibility. That's 866-848-5699, or you can request the guide online at legalexchangeshow.com. That's legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Mike, I want to talk a little bit about Boeing, which unfortunately back in the news for problems with the 737 MAX. The 737 MAX is being ordered by the FAA to be inspected due to cracks appearing in some of the older models of the aircraft. The directive applies to 471 jets in the United States, covering certain Boeing 737-8, 737-9, and 737-8200 models. And it's just like one thing after another on these guys.
Yeah. I'm not sure how important these cracks are and what they signify, but the FAA is doing the right thing by basically indicating that there are no excuses for this company anymore.
Yeah, and look, the way that these things are typically found, it's one of two things. Every pilot, when they're flying a plane, they do a walk-around before and after the flight. And then also you have larger maintenance cycles that happen on these planes depending on the number of hours flown. And so it's either, hey, like more than one pilot noticed something, and so like this all goes into a database and they say, okay, like this is a thing. Or like during the larger inspections and you know, maintenance cycles, something was noticed by the maintenance teams, and that's how this stuff gets noticed, and that's why you do this. So the good news, the system is working as intended in this case, in that it picked up these problems before a 737 MAX crashed. Remember the stuff that happened in, what was it, like 2018 and 19? Those were problems with the basically the autopilot system pitching the nose down, you know, unexpectedly, and that was causing the crashes. This is not a related issue here, but again, this stuff does happen from time to time on different planes. Case in point, again, just to make, like, again, Boeing doesn't want to hear this, but this is not like only something that happens to Boeing planes. There's an issue on Airbus A320 family aircraft, I think about a year and a half ago, where I think it was a JetBlue flight, unexpectedly dipped like 6,000 feet mid-flight. And they were like, okay, like we're going to, you know, see what's going on. And so they, you know, ordered inspections of, you know, various different systems. And what they think happened, this has happened a few times on planes, they think it was literally cosmic radiation that hit a specific, like, part of a system that flipped, like, one little bit of information and changed how the plane flew. And, okay, they cleared it to resume flying, and it was no problem. So it's not to say that, like, the 737 MAX has this flawless track record and like, everything is great, but the reason why FAA directives like this are issued and the reason why this is actually evidence that the system is working is that it was caught before it caused any problems that led to injuries or deaths.
Yeah, all well and good, and we probably wouldn't be talking about this story if it weren't the 737 MAX from Boeing.
Yeah, I think that's fair.
The reality.
Yeah, I think that's fair. Let's take a quick break, and when we come back, we'll do a little bit of stack roulette.
And
hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing, to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A nursing home stay can cost more than $14,000 a month. Before you assume you have to spend everything to qualify for Medicaid, get the facts. Call 866-848-5699 for your free copy of Cushing & Dolan's new guide, Last Minute Medicaid Eligibility. That's 866-848-5699, or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
It happens all over Massachusetts. in every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women.
Taking the lives of 1 in 3.
That's more than all forms of cancer combined. For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Stay informed and prepared for market changes and breaking business news. The Financial Exchange is live every day on YouTube. Tune in, subscribe, and keep up to date on all of our show's content on a daily basis. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
All right, we are now joined by the one and only Paul LaMonica here to talk a little bit about what's going on with SpaceX in their post-earnings and post-initial lockup expiration period. Paul, how you doing today?
I'm good, thanks. How are you guys doing? It's been a wild ride for SpaceX this week.
It has been. It really has. I mean, look, it's been a wild ride since they IPO'd. But in terms of what we've seen this week, first week that it's really been able to kind of find its footing in the public markets. And I talked yesterday about how this is kind of a common thing that you see with IPOs, where a lot of times you see selling right into the lockup expiration, and then a little bit of buying strength returns over the next month or two, and then you can kind of see where things go. Is that the sense that you get in terms of what we're seeing here?
That seems to be what's happening. Obviously, there was a significant amount of selling heading into yesterday's first lockup expiration. Part of that, I think, being the reaction to earnings, and even though revenue top forecasts, I think investors are rightfully concerned about the massive amounts of capital expenditures. SpaceX spending a lot, like many other companies. They have the double dose of bad things, if you will. Bad might be overstating it, but a double dose of concerns about their spending, because they're spending not just on the rocket launch and Starlink business, but also on AI initiatives. Not a huge surprise to see SpaceX stock fall, but the bigger concern, I think, now going forward is that the lockup isn't over. It's staggered, and they have all these tranches with so many more shares set to hit the market by the end of the year. You could see this happen periodically with investors selling SpaceX stock ahead of lockup expirations.
I've said, since SpaceX IPO'd, if you're trying to judge it based on fundamentals, that's kind of the wrong conversation to be having, because Elon Musk's companies don't often trade on a fundamental basis.
Yeah,
they trade off of things that are entirely different there.
Musky things.
Is there ever a point where, how will we know when it's time for the actual dollars to start mattering? I made the point that as Tesla was going through the Model 3 launch, it seemed like they got to that point just because they were running out of cash, actually, if things didn't get executed properly, and it turned out they executed well and got out of those problems. When will we know if SpaceX is going to run into a similar situation? Like they don't have like a new model that they're releasing, I guess. Like how do we know when it's potentially an issue?
Yeah, that's a great question. I think it's obviously different from Tesla in the sense of that they're not churning out new model vehicles per se. But what I do think is interesting is that SpaceX obviously known for the rocket launching business. But don't forget about, and now that they've folded XAI in as well, but don't forget Starlink, because of the fact that Starlink has a real, tangible consumer service.
Yeah.
There are legitimate worries on the part of investors for AT&T, Verizon, T-Mobile. My colleague Al Root wrote about that for Barron's this week, that those stocks have been hit. And a large part of that, I think, are worries that Starlink will eat into their subscriber gains. Yeah, it's possible. I mean, you drive around America, there are definitely many places in rural and ex-urban spots where you're not really getting cell phone service, and Starlink can serve a legitimate customer need there. So that could be the next catalyst if SpaceX really is able to show strong growth and justify the worries that these telecom investors have.
The piece that everyone's wondering about now, and it's been mentioned a few times in the last week, is, hey, when are SpaceX and Tesla going to merge? Any indications as to whether or not that's a serious consideration and what a potential timeline could look like?
Yeah, Al Root wrote about that also. Recently, a cover story for Barron's. I'm not sure it's something that's imminent, but it is obviously in the back of investors' minds and analysts' minds, just because of the common denominator in the equation that is Elon Musk. So I don't think you could ever rule out the possibility that those two could get rolled in together into one larger conglomerate. Whether or not it would keep the SpaceX name, Tesla, something entirely new, who knows? But that may put a floor on Tesla stock, but for the time being, it looks like SpaceX and Tesla are moving in lockstep, and that's largely been lower as of late.
Very good. Paul, appreciate you joining us today. Thank you so much for the time, and hope you have a great weekend.
Thanks, same to you guys.
That is Paul LaMonica talking about SpaceX. Mike, what do you got for us for Stack Roulette?
Chuck, you heard of Egan Jones?
Yes, I have. The bond rating agency.
Yeah, so they are a somewhat lesser-known bond rating agency. They are not the top one that comes to mind for most people, but they're being accused of great inflation and conflicts of interest by a number of regulators, and apparently being investigated by the SEC. There's two former employees there who allegedly brought up concerns about their own conflicts of interest on their compensation to the SEC, and were later allegedly terminated. Egan Jones debates all this, saying that those two people actually just wanted to go start their own company. In either case, under scrutiny, and I think worth bringing up at this point in time, because we haven't had a nice conversation about the private credit space in a little while. It was a big topic that we were talking about a lot in 2025. Is that when we were?
Yeah, it was last year. Yeah.
There were a few blow-ups in the space and some big questions, and where the questions led people to was, oh, wow, insurance companies seem to own a whole lot of this stuff. I wonder how safe it is. And this story is not answering that question, but it is throwing another straw on the camel's back here of, these insurance companies own a lot of really opaque stuff that they themselves might not know how risky it is based on the allegations against Egan Jones here.
I don't think this is anything unique. Here's the thing. If you're depending on ratings agencies to tell you when there's a problem, you probably shouldn't be running a fixed income book.
Agreed.
That's how it is. They are always late to the game. It wasn't the ratings agencies that moved in 2007 and 2008, and they're like, hey, this could be an issue. Like, no, like the market moved and then they downgraded after that.
Mm-hmm.
So I don't think this is unique. It's always been a potential conflict of interest that, hey, you want to get the business of the company or the municipality, and how do you do that while still rating the company appropriately? Always a question, you know? So I think that it's one where, I don't know, is there like a potential conflict of interest here? Of course, but if you're depending on the ratings agency to tell you, you know, how high quality a bond is, I don't know, that's kind of problematic. Yes, like if you're doing that, it's not a great sign.
I think the question would be, were some of these bonds only allowed to be purchased by the insurance companies per their board or regulations because of the Egan-Jones rating that is now being called into question? But yeah, to your point.
Yeah, viable, like reasonable question. Let's take a quick break for
the entire weekend.
The whole weekend. Yep, we're going to take a couple days off. It's nice. We like it. And then we're going to be back on Monday, and we get a busy week next week, including CPI data coming out. And so we'll be discussing that and everything else. Make sure you tune in.